We're joined now by Philips' Chief Finance Officer, Pierre-Jean Sivignon, live in Amsterdam. Monsieur Sivignon, thanks very much indeed for joining us. It is looking a bit flat, is it, at the moment as we head towards Christmas?
Yeah, I think before talking about Q4, still I'd like to say a few words about Q3. Q3 was a strong quarter for us, right? Good profitability, actually very good profitability. We reported 10.5% EBITDA margin, which is probably one of the better, if not the best, Q3 we've had in a very long time at Philips. The growth was basically 4% if you exclude TV, 1% if you include TV, and those numbers were indeed north of the analyst expectation, and the net income, as you said in your introduction, was actually quite strong. Now, yes, there is a word of caution on the fourth quarter, and basically for two reasons: uncertain economic times still, on the one hand, and the consumer sentiment, which I think is a little bit patchy. I think that would be the two main reasons, right?
Mr. Sivignon, I want to just talk. You said something quite interesting. You said excluding TV. Now, TV's been a disappointment. The World Cup did not work out for you the way you anticipated, did it?
No, it did actually. In a way, it worked too well. We had actually told market about that. We had a different seasonality in TV this year, with Q1 and Q2 actually being very strong. If you look at the comps we had in television, in particular in the second quarter, we ended up with very strong numbers. We knew that the channels and the difference between selling in and selling out at the end of the second quarter was a bit of a mismatch, and we knew that we were up to a difficult third quarter, which is what happened, and we expect, of course, things to normalize in the fourth quarter.
Right, fourth quarter is what we were talking about originally. Let's just talk about where you're seeing weak markets. Is it primarily Europe and North America?
Well, actually, yes. I would say consumer basically are still uncertain in those two parts of the world, even though if you look at it by product categories rather than by geography, you will find that three product categories of Philips, which are personal care, which are health and wellness, and which are appliances, either grew double-digit or high single-digit in that third quarter. So I think you have to, it's a bit difficult to talk about geography. I think you're better off talking about product categories. And some product categories, yes, I think you have to be a bit careful for that fourth quarter.
I want to talk to you about keeping your investors happy now. And when do you plan a share buyback or a kick up in your dividend as well?
Well, actually, we basically, in London a couple of weeks back, we had the opportunity to reiterate our strategy. We went into quite some details in the new objective or new aspirations of the company. And one of the statements we made was indeed on the capital allocation. There we outlined clearly and confirmed and reconfirmed our dividend strategy, which is 40 to 50% of distributable income to be paid out to shareholders. That's the highest payout policy in our peer group. And as you probably could see, we'd never cut our dividend during the tough time. Actually, we stuck absolutely to our guns there. And we've talked as well about M&A. We've done a little bit of M&A this quarter. Namely, we've done acquisitions in Brazil, in China, and in Israel. And we've just acquired actually a white teething company in the domain of lifestyle in North America.
Also, just go quickly here, you've got a cost-cutting plan in place. Are you on track for this reduction of 2010 fixed cost income, I think, of fixed cost base, I should say, of around about this 700 million euro level?
No, I think we're absolutely on target. You can see it in our margin. The margin of Philips the adjusted margin of Philips for the first three quarters of 2010 is at 10.1%, which is a reason why, if you look at our outlook comment in the press release, we did mention that we were expecting to further exceed that number in the fourth quarter, so that we would end up with a number north of 10.1% in that fourth quarter. So we've done that thanks to growth, but we've done that as well thanks to certainly sticking to our guns and delivering on our plan in terms of cost efficiency.
Pierre-Jean Sivignon, thank you very much indeed. He's the Chief Finance Officer there of Philips, joining us from Amsterdam.